Thank you so much. I wanted to first thank StockCharts for having me on the show today to present some of the names I'm currently bullish on. My name is Doug Busch, and I am a CMT. I have had that designation for 5 years now, and I highly recommend anyone that has a passion for technical analysis to pursue that particular designation. As far as what I do, my business is called ChartSmarter, and I author a daily note on a different major S&P sector each day. This afternoon, I'm going to show you an example of this, of what I do on a daily basis with today's healthcare note. I happen to be a big advocate of buying strength and momentum, and this group is showing both of these attributes presently. Okay, as you can see here, my first paragraph is healthy returns, a little bit of a pun. I'm often asked if we're going to witness a V-shaped recovery in the markets, and my response is I don't necessarily trade the indexes, but some individual names have certainly made V-shaped recoveries already, and a lot of them emanate from the healthcare arena. As we can see on this chart below, the XLV is the best performing major S&P sector on a year-to-date basis. These are all of Monday's closes. Even besting technology, as you can see here, interestingly enough, on a 6-month and 1-year look-back period, it is also the best actor among the major 11 S&P groups. Investors tend to be attracted to the dual benefits within the very diverse space with nice, mature dividend-paying names, as well as the riskier biotechs. All right, the second paragraph here, size matters. We often hear how in technology, the big mega cap names are lifting the benchmarks. It's actually happening within biotech as well. As you can see here on this chart, you can see the tailwind effect of the former Big Four. Of course, Celgene was bought out by Bristol Myers, but here you can see, dating back to last July, in purple is the XBI. The other three are Amgen, Biogen, and Gilead. One can see how they've outshone the XBI. And with this chart showing good technical action, a couple of these names have decent dividend yields too, with Amgen at 2.7% and Gilead at 3.3%. Okay, I often like to show ideas in my work that have worked. Of course, not all of them do. So we can learn about how certain chart patterns play out. This is a chart here of Seattle Genetics and how it appeared in our 4-7 healthcare note. A great tell was the way it shrugged off the recent overall market slump, and it has since emerged as a best-of-breed name. Monday, again, this is the chart from 4-7, but on Monday, it did jump more than 4%, continuing its powerful follow-through above this double bottom breakout of through a 119.79 trigger that was taken out on 4/16 that rose nearly 7%. We know the best breakouts tend to work right away, and this is an excellent example of this. And it now sits 2% off most recent all-time highs as of Monday's close. And although as it extended from this breakout, understand a good majority of breakouts tend to be retested before resuming their uptrends. And if this stock should do so, consider it a buying opportunity. Okay, 5 stocks I like best right now in the healthcare biotech arena. First one, NBIX, former best of breed name, now sits about 15% of most recent 52-week highs. And within technical analysis, remember, this is an art rather than a science. There's a debate whether the more times a line is touched, does that support or resistance become stronger or weaker? I believe it becomes weaker the more time is it touched. And as you can see here, notice the resistance at the downtrend line last December, this January, this February. That was broken to the upside this Monday. And in the process, it also broke above, you can see this red line here, it's 200-day moving average and the very round 100 number, providing a quote-unquote cluster of evidence, 2 or more different bullish aspects that tend to converge at the same area, which does tend to make the idea a bit more success prone. I like it right in this area. Name number 2, APLS, Apellis Pharmaceuticals. It's a somewhere recent biotech IPO that came public in late 2017. And these type of names are often underfollowed, giving savvy investors an opportunity on potentially overlooked names. This stock is lagging a bit, still 21% off most recent 52-week highs. Even after this doubling in price from just 5 weeks ago, we could see a bullish piercing line pattern right here in mid-March, and it had a nice powerful run since then. It's broke above its 50 and 200-day moving averages last week and the round 30 number. And you can see that was a familiar area of resistance here. So it's good to see it back above that 30 number. I think it could be bought on a slight pullback around 35 and added to above a double bottom pivot of 38.59. All right, idea number 3, HZNP, Horizon Therapeutics. Yet another name that had a healthily reset during the swift downdraft in February and March. It has since made a nice move higher, and earlier this month, right in here, recaptured its 200-day moving average, a positive. As the saying goes, nothing good happens below the 200-day moving average. That break above was important, as the last time the stock was below it was in early 2018. Obviously, this is a daily chart, so you're not going to see that, but it was it followed that long-term secular trend line, which was a positive. Monday, we can see here, recorded a spinning top candle, a bit concerning after a nice run from 1 month ago, but maintain a bullish stance as long as this maintains an altitude above this 50-day moving average here. And again, one can add on the way up through a possible double bottom trigger right here of 36.99. Okay, my fourth chart here, COLL, Collegium Pharmaceutical. I happen to be a big advocate of the round number theory, and this is a good example with the current roadblock here occurring with the very round 20 figure as it attempts to rid itself of teenager status. It is also a good illustration of how gaps are often filled, and if they can find strength in that vicinity, can offer a potential profitable trade. Respect here how it never really ventured below that 200-day moving average. A good sign, as we know, stops are often placed just underneath there. It rapidly recouped that long-term moving average. And notice the last 2 days, last Friday and this Monday, were above the 20 number intraday, but were unable to close above it. Very important to see a closing price above it. If that occurs, one can enter. And again, another potential add-on would be above a double bottom pivot right in this area of 24.83. Okay, last but not least, my fifth name, a little bit of speculative. This name still trades about 47% off most recent 52-week highs, even after a near doubling just 5 weeks ago. Again, notice how the very round number theory comes into play with a bounce right here off 20 on 3.7 and 3.17 and 18. It was below 20 both days, but did not close above it. That was a great sign. And currently we can see that it's finding a bit of a pushback at the 40 figure here, which it hit precisely intraday on Monday. That perhaps is a temporary rebuttal. It did form a conjunction, as we can see here, with the 200-day moving average, which is ever so slightly sloping higher. If it can close above 40, I think the name has legs higher that could potentially fill in a gap near 58 from the 117 session right here. Okay, that's all I have for you today. Thank you again for having me on. And if anyone wants to follow me on social media, they can find me at ChartSmarter. Have an excellent day and stay safe in these uncertain times.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.